Welcome to Office Hours at TradersPost for October 28th, 2025. I'm one of your hosts, Tom Hartman, Marketing Manager here at TradersPost, alongside Mike Christensen, co-founder and CSO. Today's episode is brought to you by Blue Sky Trading Company, but we'll tell you more about them later. We're always working to make TradersPost better day in and day out. Each week, we take a deep dive into all things TradersPost, answering your questions, gathering your feedback, and helping you get the best out of the most advanced trade execution engine known to man. To that end, we encourage you to submit your questions in the chat, and we'll get to them by the end of the stream. Mike, I have to say, first of all, a little bit of housekeeping here. Our Price Action Lives, the show that we do every morning from Tuesday to Wednesday, 9:30 a.m. Eastern Standard Time, where we trade in front of you with live prop firm accounts or capital using TradersPost to scale out our accounts.
Tuesday to Friday.
Tuesday to Friday, has become a highlight of my week. Not because I like getting punched in the face constantly by markets, but with the, it's always fun being with you, and then also now and seeing your growth and evolution, but then also with the new guests, the guests that we've been having on.
Yeah.
It's just been real fun, real interesting. Usually I'm not in a situation where I'm in a room and I'm not the one talking, and I want to hear everything that these guys are saying. Nick Joslin, we had today. It was the Strong Trader.
The Strong Trader, yep.
And we had Austin Silver. Just absolutely amazing just to hear successful people literally in the process of trading. I mean, on a third-party platform, like not where they normally are. And so to me, it's been amazing, and we're planning on having more guests. So if there's anyone out there that you want to have on Price Action Live, you want to see them actually trade live with us, please let us know in the comments or shoot them a message on X or on Instagram or what have you. Be sure to tag TradersPost in there. Also, we had last Thursday, we had an episode for prop firm indicators. This was a fun episode where basically I've been wanting to do this for a little while, where we are actually showcasing, actually creating and showcasing indicators that might help you become, well, I want to say become a better trader, but that like help shore up some of the shortcomings that can exist sometimes. So last episode for prop firm traders, we had an indicator that was like quotes, affirmations, rules, reminders rotating on the screen. I thought that was absolutely great. You have also calendar script that a couple of people have mentioned to me. They're like, I can't believe you had a calendar script like that shows you FOMC meetings and all kinds of things coming in the future.
Yeah, that one's really cool. I like that one.
Yeah, and so we're gonna have more of these things. Oh, and confluence of alerts that's been upgraded in order to have a little bit extra features, a little bit more buff. So we're gonna have more of that coming this Thursday. We're gonna have part 2, another set of 3 indicators for prop firms, and you have to tune in Thursday at 3 p.m. Eastern Standard Time to get yours. All right, the thing I want to talk about today before we get to the questions that have already been submitted this week has to do with this idea of prop firms versus crypto trading. Prop firms versus crypto trading. Now, we've touched on this idea in the past of people wonder if prop firms are too good to be true. Have you heard about this, Mike? That people are like, is this a scam? Is this legitimate? Like, what kind of thing is this? You're not trading the market, but you are?
I feel like there's more posts on how prop firms actually work, though, than those questioning their legitimacy. The truth is, it's just as hard to work with a prop firm as any other form of trading. It's not like there's a cheat code here or anything like that. You still have to be a good trader in order to make money prop firm trading. But I have seen some posts out there of people wondering if this is even a legitimate process, and is it sanctioned? Is it regulated? You know, those types of questions are certainly circulating around. Plus a whole lot of misinformation and rumors. I still see a lot of posts of unsubstantiated claims where people are saying, you know, like you're going to get banned if you use an automated trading strategy. I know at least half of the firms we work with have explicitly stated they support automated trading. It's on their documentation pages. They've told us directly. So that one's a tough one for me to keep seeing that one circulating. There is, of course, a handful of firms that do not allow automated trading, but they do allow trade copying. And that's explicitly in their documentation. So those two myths still seem to circulate. But other than that, I see more posts on how to just try to get the process of prop firm trading to work for you, which is a tough one, of course.
Well, I know that I was a victim of the same sort of thinking, because back when we were talking about prop firms a couple of years ago, I had it in my head. I had done almost no research about prop firms, and I thought they were a scam. I was just saying that, oh, they can't be legitimate. It doesn't make any sense, until you scratch the surface just a little bit and get into it, and then you're like, oh, okay, this actually does make sense. The most prevalent idea that I had was that they're always looking for ways to cheat you out of your payout. This is what I thought all the time, because those are the stories that you hear,
Right.
and time after time after time, when I dig into a lot of these stories, it's like, well, the person was doing something shady, or they were breaking some sort of rule, or I know of a person who didn't get their payout, and I know they were doing something shady behind the scenes. Like, don't be upset because they caught you. They have their own risk that they have to mitigate here, and
That's
it
right.
makes sense that they're going to do it that way.
Yeah, one of the
And
common ones is people trying to go long in one account and short in the other, and hope for the best. Like, oh well, if I do it this way, then I'll hit profit on half the accounts and I'll lose the other half. But at least I've hedged my way to the success and finish line. Yeah, you can't do that. That's obviously against prop firm rules, and it's also not something that you can do across multiple prop firms as well. Not only is that against their terms of service, but it's also a violation of CFTC laws, where you can't be long and short the same instrument in two separate live accounts either. I know some traders online that swear this is what they do every day, and it might be true that you're doing it, but you're still violating the regulatory rules around this process, and eventually you will be caught and your accounts will be shut down. So I don't recommend doing long and short in two separate accounts, regardless if it's simulated or not.
that's right. Well, I wanted to just read this post that was posted on the day trading subreddit 3 days ago. I thought it was fun, and not just the post, but the comments that are underneath there, because it really is quintessential example of the atmosphere within the trading space. Because there seems to be this idea of people who trade the real way, the right way, and then people who trade prop firms. So you have here this post from Puzzled.org, who says, prop firms epidemic. I see way too many posts about these so-called prop firms that are just scams that offer a demo account. When did the trading scene become that naive? Why are there so many kids paying for subscriptions that are just demo paper accounts? A micro futures contract is not that expensive, and brokers offer a demo account for free. Am I too old to understand these new generations? What is going on? So one of the top comments over here from Trendy Stick says it's just leverage, X amount of drawdown, and potential for real money payouts for X price, and the well-established firms do pay. That's one of the crucial points here. That sure, there's the bottom of the barrel companies that may be doing something shady, but the top ones that we're dealing with do pay out. Whether or not the accounts are simulated makes zero difference, because the traders are still trading live market price action, and the winners are paid by the losers, just like every other form of trading. Stocks, futures, options, forex, all the same. The winners only win because the losers lose. Right. By definition, it isn't a scam, as the terms are laid out quite clearly for all to see. The internet is dodgy, so if you go there blindly trusting everyone, then you will of course get scammed. Prop firms are fine if you can trade and have half a brain cell to do some due diligence before risking any money. Now, the reason I find this sort of, I love the retort. I think it makes a lot of sense here, that quite a few people that I've seen in forums who get burned have not read the rules. They just bought the prop firm account. They're trying to trade. They don't understand that this prop firm might have a different, drawdown than that one. That their position size can be different. That how often they have to be consistent over here, and how many days have to be profitable over there. They're not aware of it, and so they reach these hurdles. They blow up their eval account or funded account, and then they're really upset about it.
Right.
But getting your opinion here, Mike, as someone who's been in this for enough time now, do you feel like the prop firms are like unfair?
No, I don't believe they're unfair. I think the rules are pretty clear. And if you've managed to manage risk the way that they expect you to manage risk, then it is a really good risk reward proposition. Just thinking about the idea of spending, let's just use the direct to funded accounts, for example. You spend about $200 to $300 for a direct to funded account, And the first payout you can expect from that account is about 10 times that amount, as long as you have met all the criteria to receive that payout. So the risk to reward ratio is really, really good. In terms of your ability to actually trade it, there are obviously a lot of rules that are very hard to follow that you normally wouldn't find in a live futures account. But the trade-off in my mind, and having traded live futures accounts myself, and lost a lot more than the cost of funded accounts and futures for myself, I'm realizing that when it comes to trading a futures account, there is no restriction. If you go open a brokerage account with Tradeovate right now, and you fund it with $10,000, you can lose that $10,000 in one day. No one's going to stop you from losing that money. And that I think is what makes prop firm accounts so attractive. You can keep your risk incredibly low. Let's just say you go pay for a 25K eval account and spend $25 or $30 or whatever it is, and test your ability to actually trade markets without ever risking real money in those markets. So for me, I think it's actually one of the best ways for a beginning trader to put real money on the line without losing enormous sums of money relative to their riskable money.
Right. I completely agree. And I was a big, still I am a big crypto trader. That's where I spend my time, crypto and crypto futures. And less now do I find it useful to be there, because what's great about the prop firm trading versus the crypto trading is that my risk is really upfront, right? Once I pay for my account and I'm trading it, I already know that, hey, I have these rules to follow. I know the fine path I have to walk. I paid my money upfront. Whereas I can transfer $5,000 into a crypto account, never lose a penny, press a button, and then blow the entire account, lose everything.
Exactly.
And that ease, sure, I have this flexibility, I have this freedom. I could take a 99% drawdown on a futures position if I want to.
Mm-hmm.
But the times that I've had myself and I've seen other people just lose thousands and thousands of dollars, I mean, on the low end, thousands of dollars,
Right.
just by a couple of button presses. And you go, learn that in a prop firm account. Learn that in that. And so you have, to me, it's like you have all the benefit of the paper trading, right? Because you have this limited risk. And then you have this leverage on the upside. And that's not even talking about using TradersPost in order to then, once you figure out something that works, a strategy that works for you, to then multiply that across multiple accounts.
Correct.
And so I find that to be just, the more time goes on, the more I look at prop firms as a savior, because I would have just continued losing money and had no other way around it. Plus, not everyone has the money to go and open up a futures account or to put any significant money. If you want to trade stocks and you want to trade some of the larger tickers, you can't afford it. And
Yeah.
so
And
to me, it's a little bit unfair,
fair,
whereas someone else who was on the lower end of the scale economically might still have a chance.
Right. You can certainly start trading crypto with a little bit of money as well, but I just feel like that those dollars
I can't hear you there. Peter, is he muted? Am I muted? Sorry. Okay. Forgive me.
Are you hearing me now, Tom?
Because I can't hear either of you right now.
Okay. There's some kind of glitch in our stream here.
Peter, can you hear Mike? Okay, go ahead. Sorry about that, Mike.
No worries. I was just going to make mention of the idea that there's a lot more you can learn in a prop firm account with $30 to $50 than putting 30 to 50 in crypto and just seeing what happens. I'm not thinking Tom picked that up, though. For all of our listeners, I'm sure you guys would agree. For those of you that have traded prop firm accounts, there's a massive amount of education that can take place in these accounts just from following the rules that they've listed out for you. The amount of drawdown that's given, the amount of risk reward, the max number of contracts. The whole idea is to get you thinking about how much can be made or lost on every trade you take. Why don't we? Oh boy.
Sorry about that, folks. I'm back here. All right, I just missed that last part. Mike, if you just take that one more time.
That's okay. Can you hear me now?
I can, yeah.
Okay. I was just mentioning this idea of what can be learned with that $30 to $50 in a prop firm account versus putting 30 to 50 into a crypto account and hoping that it goes one way or the other, which happens a lot. You know, you have a lot of people who are like, well, I'm going to go put $50 on Bitcoin and just see what happens. And that's not really learning trading. Unfortunately, there's a lot to learn in the process around position management, risk. And so if you're trading with a simulated account that includes $50,000 in it, then it starts to get you used to the mechanics of trading that kind of size.
That's right. Now, I want to encourage everyone to go take a look at Trading Bot sessions with Mike on the TradersPost YouTube channel, because there you're going to get to see there's a bunch of interviews there that he's done with prop firm traders, just like you and me. And what I love about it is that, I don't know if this is how you feel about it, Mike, but when I watch those episodes, it sort of feels like a new modern day Market Wizards book,
A little bit,
where
yeah.
you get the feel and you're like, hey, they went through some turmoil trying to figure out how to do this properly, but they were able to do stuff that got them out of a dead end job, out of feeling like Rebecca wanted to contribute to her home through as a single mother. You have the person running for for Congress as using the money from prop firm winnings in order to fund the campaign. I just find it to be such you're looking for a democratized access to markets. This to me fulfills the dream in a way that crypto hasn't filled. I should just mention one thing. So I just want to finish off with this because I just think this is incredible. I've been talking about this for a week now. This is a clip from Senator Cynthia Lummis from Wyoming, who's talking about the US government investing in Bitcoin in the Bitcoin Strategic Reserve. All right. So just listen to this. I present it without any commentary right now. Just listen to what she's saying about what the government wants to do. She is the one who proposed the Bitcoin. She's the main sponsor on the bill for the Bitcoin Strategic Reserve. So let's just hear it.
I was able to see through several studies that were done. Michael Saylor, Arthur Laffin, the Laffer Kurd inventor, has done one that profile were to acquire 5% of the world's Bitcoin, roughly 1 million, and hold them for 20 years, you could cut the national debt in half. And so I view a Bitcoin strategic reserve as a means of debt. And because our bill would allow the US to acquire Bitcoin for that purpose without using new borrowed money to do it, it's just taking existing assets that we have that are undervalued and applying them to Bitcoin, which is over a 20-year period going to increase in value. So what we would do is take these gold certificates, convert them from what they're being held at on the US books at their 1974 value, and converting them to current value of gold, and then acquiring the Bitcoin, we would be in a position to fund a US strategic reserve.
Okay.
Love the thought
Mike.
on it. Yeah.
I mean, that to me sounds like every YOLO degen crypto trader I've ever heard, where they go, let me take out a loan, mortgage my house, put that inside of this crypto trade, I'm going to buy Bitcoin, and then I'm going to be rich in a few years, which may or may not be true. But the idea here is that the gold that they have on the books, they're going to revalue it to, they're going to mark the market for at 4,000 an ounce as opposed to whatever, $40 an ounce. Then they're going to collateralize that, take that money out, put it into Bitcoin, and then in 20 years pay off half the debt. Which is, if this is the plan, the hoops you have to go through on a prop firm in order to pass an account and get funding is PhD level trader skill. Like that is actual skill to me. So I leave that there with that. Whether it works or not is to me fine, but I just can't believe that that is in the regular discourse. Like she's not being raked over the coals or anything like that, or grilled by news or anything like that. That's perfectly fine. But the prop firm hurdles, people have a problem with this, or people might see this as a scam. No, this to me is way more legitimate. Okay, Mike, let me get your opinion on this.
On Tom again.
No,
are we back?
Yeah, I can hear you. You can hear me?
Okay, I couldn't hear Tom on my side now.
Oh.
Okay, no, I'm with you. I think that this is a fascinating approach to managing federal funds. We'll see how that plays out over this period of time. But I agree. I think interesting to circle back to the hurdles of prop firm trading. But again, I want to emphasize this point. I don't think that the rules around prop firm trading are all that difficult or all that, let me rephrase that, all that complex. They are difficult, certainly, to achieve because risk management is a very difficult process to implement. And you really have to be diligent and consistent and disciplined in order to pull it off. But it's not like the hurdles are so complex that no one ever gets to the finish line. We know plenty of people that get to the finish line and get payouts consistently because they just follow the rules consistently.
That's right. Exactly. All right. We do have a question in the chat. This question comes from Sumit Pradhan, who says, can you shed more light on Project X issue of last week? What happened there? Is there any chance of having it for TradersPost?
Well, we don't run Project X, obviously, but what we can tell you is what the news covered around the event. Literally tens of thousands, if not hundreds of thousands of businesses were impacted by an outage with Amazon Web Services. If you're not familiar, AWS runs a very large percentage of the entire web because so many people use their servers. They're competitively priced. And so many people were impacted by this specific outage from Amazon. That type of outage is exceedingly rare, but it does happen and it does impact businesses like TradersPost as well. We can't promise 100% uptime. There are times in which our service providers may go out. It could be a DNS provider. It could be Cloudflare. It could be one of our web host providers. It could be even the internet behind the scenes, any of the network infrastructure that's in place that's localized to our servers. We distribute out our servers across multiple locations and we'll continue to create redundancies, but it can happen from time to time in which there will be an outage and we move as quickly as we can to pull things up. The outage with our service last week, though, did not impact us directly because our servers were not affected by that outage. So while we were still sending signals to our broker and platform providers, we just had to respond to the error messages that occurred on their side, obviously. So is there any way completely around it? Unfortunately, no. There's no way to avoid outages on the internet at all. It's always going to happen at some scale at some point.
Reminds me of the CrowdStrike one from 2 years ago, Blue Screen of Death, where even airports were all closed down and people are like, I don't understand. Like, you can't fly the plane otherwise? Nope. You're stuck in Dallas. You're not going anywhere for a while.
For the same reason that water isn't guaranteed to your house or internet isn't guaranteed to your house or, electricity may go out, things happen from time to time. So we do have to expect that we are prepared to respond to those scenarios.
Perfect. Well, we have more questions to answer today, but before we do, just a quick word from our sponsor.
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with TradersPost, it just clicks. You connect Blue Sky inside TradersPost, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with TradersPost. Apply today at bluesky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
All right, welcome back. Let's get to the questions we had for this week. Just as a reminder, you can always go to feedback.traderspost.io in order to ask your questions. Could be general, could be specific about features you'd like to have on the platform, testimonials, or anything like that. Our first question comes in from Sylvain A, who says, can I set up a system so that if a limit order isn't filled after a certain time, let's say 5 minutes, TradersPost replaces the limit order by a market order?
It's an interesting request. I like the idea of it. It is not something that we currently support. We do, of course, support the ability for you to send a cancel order and then can, of course, send another follow-up signal to convert your order to a market order. So it is possible for you to send 3 different signals in sequence, assuming that you don't get filled on the limit order. But we'll look at investigating the potential of that one. We recently released a feature where you can send a delay with your entry. So I could add delay 60, which would imply 60 seconds of delay before an order is executed. So there are some ways to play around with an idea like this, where I could send a limit order and then send a cancel order that is sent 60 seconds later. But if the limit order is filled, then the cancel order would do nothing at that point. And then if the cancel order succeeds, then I could send a follow-up market order in a separate order. So there's a few different ways to play with the way our infrastructure currently works to accomplish the same goal.
Yeah, this is the delay option that you can see in the docs here at docs.traderspost.io under the new releases on October 25th. This went out. So basically you have a delay feature here, property you can add to your JSON message. All right. Actually, I should mention here that we also have ignore exits that's been added in. So you can now choose to ignore exit signals from your strategy while continuing to process entry signals. So when ignore exit setting is enabled, TradersPost will execute any entry orders as usual, but any exit signals will be ignored. This gives you the flexibility to manage exits manually through another strategy or with your own discretionary trading decision. This is something that people had been asking for on previous office hours, and we're happy to be able to deliver that. All right, next question comes in from Jeff P, who asks, as a certain profit target are hit, moving the stop loss up to define points would be fantastic in order to lock in profits as the trade progresses. And there's a second feature request he's asking here as well. After hitting a certain profit target, but not the full take profit, it would be nice to have the stop move up to break even. These are all very interesting. I'm always very, because I understand that desire as well. There's always this trade-off between, hey, you can have that flexibility of handling that at your signal source and then sending us a signal that you need, as opposed to a dedicated feature of that within the platform. It's always something that we navigate, but thank you for letting us know. Next question comes in from Atache S, who says, actually, I'm just curious about whether if I connect a single account in the TradeRPost group, trading account to TradersPost via webhook from a trading view indicator, if it would copy across all the accounts in the group, or if I would need to individually connect each one. So this is, they're connecting. Yeah, go ahead.
Yeah, we brought this up a couple of times. I'm not actually entirely sure. I'm pretty sure that it works. I'm fairly certain that if you have a leader account on TradeRPost that is tied within a group, that it should copy the trades out to the others. If you didn't want to add the accounts to TradersPost. But just remember that there are some limitations to the group trading in general. You can't have take profit and stop loss orders, if I recall correctly. So TradersPost handles a lot of this stuff for you, where when you add those other accounts, you're allowed to add in the take profit and stop losses. They're all executed concurrently, which also means that if your leader account fails for some reason, all the other accounts are going to fail if you use the group trading. But on TradersPost, if one of the accounts fails, the other ones will still succeed, as long as there wasn't a specific error that would cause that.
Awesome. All right, next up, question comes from Lashleg, who says, I have 2 strategies running in the same session. When one is active, the other should wait until the position is closed before starting. Now, you can sort of do this if your both strategies are running 2 different directions. If one strategy is bullish and the other one is bearish, and each strategy restricts it to only allowing bullish signals or only allowing bearish ones, and to not swap sides or add to position, then the short strategy won't run as long as the long strategy is in a trade. However, for this person, as the conversation went on, it was more that they wanted to be able to set a strategy to work in a certain period of time, and then another strategy to work afterwards. You could set that up in the trading window so that you have a trading window. So in the morning session, you're running strategy A, and then B happens in the other one. But you can't have it automatically that some trigger occurs, and all of a sudden now the second strategy is on and the first one is off.
Yeah. Another interesting request, though. I'm getting some interesting, sophisticated, execution rules that people are looking for that are ideas we can explore for sure.
You know what? So many of these comes from someone realizes there's a shortcoming in their strategy or in their thinking or in their trading, what have you, and they go, "Hey, if I had this feature, sort of like the lockout feature, if I had this feature, I'd be able to mitigate this this downside."
Right.
And I like how obviously, as you'd imagine, the people trading, as you're trading, if you let us know the sort of things that you're interested in, the sort of features you want to have, what would make your life easier, even though we might not implement it immediately, if it makes sense, then it could be added to the roadmap. And if more people ask about it, it makes it far more likely that we can dedicate the time and resources in order to do it. So I love the symbiotic relationship we have with you guys. We want you to let us know what you're looking for and what your pain points are so that we can help solve them. All right. The last question comes from Arthur D, who asked, I wasn't too sure about this, but they asked, how do I set a different webhook address so I can send trades from each of my TradeStation accounts on TradingView platform, so I can configure my alerts to go to each of their respective TradeStation accounts with TradersPost?
I wonder what
So
the use
I
case
sort of wanted
is
to.
for this. I mean, but ultimately you can just make different strategies for each account. So one strategy, one subscription, another strategy, another subscription, another strategy, another subscription. Each has their own webhook URL, and that would execute with that specific account. But in order to execute across those three accounts, you would have to send 3 separate webhook calls. So I'm wondering what the use case is here.
Yeah, later on, there's someone else who was asking that, let's say they had a Pine script and they had multiple alerts, like not using the main alert inside of TradingView, but let's say they had like 5-10 alerts that were stacked. And would the script fire each one of those alerts and then send that over to us? So yes, it would. But then if you send it to the same webhook for the same strategy, you end up with the race conditions issue. Whereas you can split, if they're send it to different strategies, different webhooks. Different strategies. It might work better. There is also for this user, I was wondering if, like you just said, you weren't sure about the use case. Have you ever seen something like that where someone is, for the same broker, connecting individual strategies, each individual one for a different account of that broker?
Sometimes, because usually if you have more than one account with one broker, it means that one's a margin account, one's a futures account, maybe one's a cash account. And the limitations of those accounts would dictate that they have different strategies for each account at the same broker. For example, I might have a TradeStation brokerage account, but I have 3 independent accounts in there. One's a margin account for options trading, one's a cash account for stocks, and then another is a futures account.
Okay, yeah, actually that makes sense. Even for crypto, you could have sub accounts, and then each one of those would be their own connection. Okay,
right.
that makes sense.
And we support that.
Yeah, awesome. Well, those are the questions and feature requests that we've had for the last week. Has there anything else come in, Peter? The chat? Nope, perfect. So we will be back next Tuesday at 3 p.m. Eastern Standard Time to answer more of your questions. If you want to get them through, please feel free to go to feedback.traderspulse.io. We want to make TradersPulse as good as it can be, and we need your help with that. And we thank you. And until then, we wish you happy trading.
Cheers, everybody.